Hey traders, welcome back to this week's stock market forecast. We're going to be looking at the global benchmark indices before dropping down to the sector level and then down to the individual level to find the best stocks to buy now and the best stocks to sell now heading into a new trading week. And in the past few videos, we've been talking about the fact that we should be having a bullish bias in the stock market. On balance, we're pushing new all-time highs in the S&P 500. And once again this week, I have a long bias in stocks. Okay, so moving on to the portfolio selection for next week, what's the best global benchmarks to be looking at long and short? The first thing to note, the most important thing we're looking at here, the VIX, the key risk on risk off trigger that we track and has been keeping us on the right side of this rally in the Hedge Dash analytics platform is the VIX, and the VIX is rock bottom of the performance metrics in the Hedge Dash platform. So what this tells me is going into this week, once again, I want to have a long bias on equities. We'll look at long opportunities and short opportunities, but I favor the long opportunities primarily heading into next week. Now, if I click the in play button, you can see the separated markets here are the DAX and the Nasdaq as the two best to the long side, and the Kospi as the best benchmark to the short side. So we'll look at those in today's video. And if I click back off it, there are a few others that I quite like. One is the IBEX, which is sitting at number 3. And the Russell, the S&P, and the Dow Jones, they're all making their way down. Same with the TSX. We've been looking at this in previous videos. What this means is that I would prefer the Nasdaq heading into next week for outperformance to the upside, but I still favor bullish setups in the Russell, the S&P 500, and the Dow Jones the whole time the VIX is sitting down here at the bottom of the indices. So we'll have a look at those to the upside as well. We'll look at the levels in those markets. And finally, to the short side, it really is primarily the Kospi. We could perhaps look at the FTSE, but once you start to look at the FTSE, the ASX, I mean, these are not technically bearish markets. All of the benchmarks are actually performing pretty well. So really, it's just the Kospi to the short side heading into next week that we're going to be looking at in today's video. Okay, so kicking off the markets then with the DAX. Now, the blue levels here are the range, the projected range for next week for the DAX. And if you want to know a little bit more about this, I discussed these in a bit more detail in yesterday's weekly Forex forecast video. But once we start to breach these levels, we become overbought and oversold during the week. And if we breach the levels of the second projected range, we become extremely overbought and extremely oversold. So you could think of this as the sell zone, and this is the buy zone. But if you've got a strong market, really selling is just to book profits. And the buy zone here would be to enter, and vice versa. With a weak market, we'd be looking to sell and book profits in the buy zone down here for a weak market. So coming into this week, the DAX is very, very strong, really nice trending move, big breakout. What I want to see is I want to see the DAX come down and breach the 20071.96. If we take out this level in the DAX, we've entered the buy zone. This is where I'll be dropping down, looking for bullish reversal patterns on the lower time frames, 15 minutes, 5 minutes, and looking for this market to liquidate back inside the range. So I'm looking to capture 1 or 2 days, and it's exactly the same setup that I trade in real time with GMT members. And we're currently only looking at 5 losses in the previous 64 real-time setups posted to GMT members. So these are the exact setups that I'm looking at during the week. The second thing I'm going to be looking for is if we break down and we take out the 19759.31, this is the second place. Whether I'm long already from here and risk managing it, buying again and looking to scratch this for break even on the pullback, or whether I'm not long and I get the initial opportunity, this is the second place below that level. I'll be looking for a buy opportunity next week. And the third thing is look for it to break down below the moving average and then look for the break back above, in this case, 30 period moving average. And as this turns, you get your bull flag setup. Again, exactly the same setups that we went through in yesterday's weekly Forex forecast video for those of you who watched yesterday's video. But either way, I can either be long the DAX next week or do nothing. I cannot sell the DAX next week. Next is the Nasdaq. Now, the Nasdaq has been a little bit beaten down, but we saw a re-acceleration of the Nasdaq last week. And going into this week, this is now my favorite benchmark to the upside. What I'd like to see is I'd like to see this market pull back, breach the lower bound at the 21151.79. And look how nicely this sits right at the prior high. This is going to be a great place next week if we can pull back to start to look for a 1 or 2 day reversal back inside the range in the Nasdaq. Although it's not expected to happen, if it does happen that we take out the second lower bound, very rarely does it happen, but when it does, you have a much greater chance of reversing. If for whatever reason we come and take this out, and usually you need a catalyst, but without any catalyst, these gold levels are very often not taken out. But if it were to do that, this would be the second place, whether I'm already long from over here and just risk managing a losing position, or whether I get the opportunity to buy it for the first time. This would be the second place I'd be looking for a 1 or 2 day reversal to the upside. And the third and final thing is, again, look for that intra-week breakout where the moving average kind of goes flat. And then instead of taking out the lower bound, you get the re-acceleration back above the moving average. The moving average follows it, and then it tucks into the moving average, moves away, and the profit taking target to the upside in the Nasdaq next week is the 22092.70. Next is the Spanish IBEX. Now I've zoomed out here so you can see we've got a big breakout of this consolidation. This could just be starting the next leg up. Very much like the last two markets, I can only be long this market next week. I cannot short it under any circumstances. So if we zoom in, what I'd like to see personally next week is I'd like to see the IBEX coming down, entering the buy zone, so I can look to buy this on the dip. Below the 11857.71, we become oversold intra-week, so during the week, and this sets up a great opportunity to look for a 1 or 2 day reversal back inside the range. If we come down and take out the 11643.43, even though that's unexpected, in the event it does happen, this would be the second place I'd be looking for a 1 or 2 day reversal back inside the bigger range. And the third and final thing, as always, is you can look for the break, the pullback towards the moving average. Usually you want to see this pulling down below the moving average and then re-breaking in the direction it follows, and you can look for that bull flag set up in this case into the top of the range in the upper bound at the 12286.28. Next is the Russell, so small caps in the US. And what happened in the Russell was we took out the all-time high at the 2458. It was outperforming. And then we saw profit taking coming in and a rotation into the Nasdaq. So I prefer the Nasdaq next week, but I do still favor long opportunities in the Russell as it currently stands. What I'd like to see is I'd like to see the Russell enter the buy zone, which is below the 234317. If we can come down and take out this level, this is where the odds turn in our favor for a 1 or 2 day reversal back inside this range. So this is where I'm dropping down, looking for those bullish reversal patterns, double bottoms, inverse head and shoulders, looking for that 1 or 2 day liquidation back inside the range. When I say liquidation, it's shorts who are shorting, and then they start to run out of steam, and then they exit their shorts, and that causes the liquidation, in this case, to the upside. The second place I'll be looking for a potential long opportunity, whether I'm long already or not, is below the 2277.36. If we take out this level, this is the second place I'll be looking for a 1 or 2 day reversal back inside the bigger range. And the third and final thing, as always, we're already below the moving average. So you can look for this just to continue to pull back and then break. You get this kind of breakout. Some of you like your trend lines. It would look a bit like this. But really it breaks the moving average and then pulls back into it. And you get that initial push away into the upper bound, into the profit taking zone here above the 2474.80. Next is the S&P 500. I have a bullish bias on balance like the other US benchmarks. What I'd like to see is very much like the Nasdaq. Look how nicely the lower bound sits at the prior high. This is nice confluence where if we start to break down, not only do we enter the buy zone below the 6017.04, but we stair step the prior high. So there's a nice Kiev broken resistance turning support here. This would be a great place next week to start to look for shorts to cover their positions and for a 1 or 2 day liquidation back inside the range. If we break all the way down to the 5943.82, again, this is unexpected. And if that were to happen, if we came all the way down here next week, this would likely be a much bigger reversal. And it would probably be a one wave. And then we get a pullback, in this area, and then we get the next leg down. So it's unlikely that that's going to happen. But if it does, it's a big bearish sign. So if we do take this out, I will still be looking, whether I'm already long or not, for a potential 1 or 2 day opportunity back inside the bigger range. And the third and final thing is look for it to break down below its moving average and then re-break. And that re-break is where you get that bull flag set up in this case, comes in and hugs the moving average, moves away into the profit taking zone up here above the 6163.49. And the final benchmark to the upside that I like is the Dow Jones. Again, it's kind of moving sideways. I want to see it pull back so I can buy the dip. That would be below the 44064.91. That's where we turn oversold intra-week. This is where the odds swing in our favor for a 1 or 2 day reversal back inside the range. If we break through there and take out the 43487.31, whether I'm long already or not, that would be the second place. I'll be looking for a 1 or 2 day reversal back inside the bigger range. And we're already below. You can see we've already started to consolidate. So you can look for that intra-week breakout back above the moving average with momentum. You shouldn't have to squint. It should be very clear. The break with momentum should be clear, not just a small push. It should be a very strong break, and then it pulls back into it. And that is your bull flag set up into the profit taking zone, in this case above the 45220.12. And finally, the only global benchmark I'd really consider for shorts next week is the Kospi. So if we pull back in the Kospi and we breach the 2497.96, we enter the sell zone and we have a really nice high just here. This would be a good place to start to look to see if you can start to run out of momentum. You start to see momentum fading, and then you start to see bearish reversal patterns taking hold, looking for those double tops, head and shoulders for a 1 or 2 day reversal back inside this range. If we blast through here and take out the 2567.76, it's the second place. Whether I'm short already or not, I'll be looking for a 1 or 2 day reversal back inside the bigger range. And the third and final thing, look for it to pull back above the moving average. Notice how it pulls back, sells off, and then look at how we tuck into it and move away. So you can look for that intra-week breakout back down below the moving average. Moving average follows it, very much like this, tucks into it, and then you get that bear flag set up, moves away with momentum into the profit taking zone here, and that's below the 2358.35. Okay, so dropping down to the sector level, we already know we should really be still looking for long opportunities primarily in the stock market. And something important to note is that XLK, the biggest weighting in the S&P 500 in terms of sectors, is back in the positive side. This is a very bullish sign for the overall market. The second thing to note is that XLU, the most risk-off sector, is now dropping out of the positive side. So another very risk-on signal here from the internals of the stock market. And we also have XLE as one of the top short sectors for rotations coming into this week. Also a very risk-on sign, because when XLE is down, usually crude oil is down, and when crude oil is down, this is bullish for the stock market. And if you have disinflationary conditions, this allows for lower interest rates. So it's safe to say, at least for now, the internals of the stock market are pointing towards a fairly bullish month, and a Santa Claus rally is probably the most likely outcome for the rest of the month. So based on what we're seeing, at least for now, in the internals of the stock market, is we have a bullish outlook internally, and this is going to be supportive of a lower VIX, pointing towards a possible Santa Claus rally and a fairly bullish month in December. So in terms of actual trading, we're going to be looking at stocks from XLY, XLC to the upside, and we're also going to look at a couple of stocks to the downside in XLE, and a couple of stocks to the downside in XLB. Okay, so kicking off with the first stock in XLY, consumer discretionary, it is of course Tesla. This is a great outperforming stock relative to the rest of the stock market, and it's a market that I only want to be long while doing nothing next week. We started to break out already of this ascending triangle. You can see this. And what I'd like to see is, I'd like to see it come back if possible next week and retest the top of this. It's right at the lower bound. So we move into the sell zone below the 356.80, and at the same time, we trade into and retest the ascending triangle breakout high. So this would be a great place to look for a 1 or 2 day reversal if we can get that next week. If we come all the way down to the 32439, something has happened unexpectedly, and that would be very bearish for Tesla. However, it would be the second place. Whether I'm long or not, I would be looking for a 1 or 2 day reversal. And the third and final thing, which is probable going into next week based on this breakout and the nice momentum, is if we start to pull back, we consolidate below the moving average, and then you get the reacceleration of momentum. The moving average catches up with it, and you get that bull flag set up into the 421.63. That's where we start to enter the profit taking zone for any intra-week longs in Tesla next week. The next stock I like to the upside in XLY is Amazon. Also a very nice performing market. I would like to see this pull back, breaching the 219.49. That's where we enter the buy zone, especially if we can push through and stair step this high. That would be good. But we may not come all the way back to this. Anywhere below the 219.49, I'm going to be looking. Are we getting momentum fading? Are we getting reversal patterns coming in, looking for that 1 or 2 day liquidation? As a backup plan, if we unexpectedly come all the way down to the 211.96, Whether I'm long already or not, this would be the second place. I'll be looking for a 1 or 2 day reversal. And the third and final thing is you can look for the intra-week breakout where the moving average kind of goes flat. You break back above it, the moving average follows, and then you get that kind of bull flag set up into the profit taking zone, in this case above the 234.56. Moving on then to XLC, the communication sector. The stock I like the best is Netflix going into next week. Again, we have this really nice setup where the prior high sits right at the lower bound of the range. So if we can pull back and breach this, we'll also be trading into the prior high there and here. This is going to be an area I'm going to start to look for bullish reversal patterns on lower time frames for a 1 or 2 day reversal back inside the range. If, as a backup plan, we blast through, take out the 870.70, this would be the second place below here, especially if we take out this low, that I would be looking for a 1 or 2 day reversal. Again, this would suggest probably the start of a bigger reversal because it's abnormal momentum, it's not expected. But that would be the second place I'd be looking for a potential long opportunity. And the third and final thing, as always, look for the moving average to flatten. And if you break back above it, the moving average follows and you get that bull flag set up. That first move back into the moving average, you can look for the drive away into the profit taking zone, which in Amazon is above the 966.75. And the final stock I like to the upside, which sits in XLC communication sector, is WBD. And this, of course, is in the Nasdaq as well. So if we do get an outperformance of the Nasdaq, this is a stock that should benefit to the upside. What I'd like to see is I'd like to see this coming down and breaching the 10.07. Not only do we have prior lows right here, but also we have a couple of prior highs. So this is going to be a great area if we can sell off into this buy zone, that I'm going to be looking for double bottoms. I'm going to be looking for inverse head and shoulders patterns in lower time frames, looking for momentum to fade so we snap back inside the range for 1 or 2 days. If we blast through here and take out the 9.48, this is the second place. As unexpected as it is, it's the second place I'd be looking for a potential long opportunity for 1 or 2 days. And the third and final thing, again, look for it to break down below the moving average. That shows that it's corrected during the week. And then you get the reacceleration and you can look for that pullback into the moving average and away into the profit taking target here above the 11.24. Okay, so moving on to the stocks that I like for potential short opportunities next week, starting with Dow. This sits in XLB, the materials sector, which is the #1 short theme in terms of sectors next week. What I'd like to see is I'd like to see this pulling back. Yet again, we have this setup where the prior low, so acting as support, broken support, turning resistance, sits right at the upper bound of the range at the 43.28. So if we breach this, going to be looking here for a 1 or 2 day reversal back inside this range. If, as unexpected as it is, we blast through and take out the 44.57, we become extremely overbought intra-week. The odds of snapping back increase. And this will be the second place, whether I'm short or not, I'll be looking for a 1 or 2 day reversal. And the third and final thing, as always, look for it to break back above the moving average. That shows that it's correcting intra-week. You've got a consolidation. And then back down below it with momentum. That's what sets up a bear flag setup intra-week into the profit-taking zone here below the 40.69. The second stock I like for potential short opportunities next week is ticker LYB. Sits in the material sector again. Very weak stock in a very weak sector. If we can pull back in this case and trade into the 75.59 and above it, this is where we start to enter the sell zone next week. And this is where I'll be looking for a 1 or 2 day liquidation back inside the range. If we blast through here, we're getting towards the prior lows up here. So if we blast through the 80.87 again, we'd probably have to have some bullish catalyst, most likely unexpected because we don't have earnings or anything like that. But if we do trade through there, this would be the second place, whether I'm short already or not, that I'd be looking for a 1 or 2 day reversal back inside the bigger range. And the third and final thing, look for the break back down below the moving average, tucks into it and moves away. So first of all, the better setup, if you can breach the moving average, hang around above it, and then you get the sell-off. The moving average comes down intra-week, and we're in the 1 hour chart here. Pulls back, and that gives you your bear flag set up into the profit-taking zone here, which sits below the 74.18. I'm wrapping up the US stocks with the energy sector, which was the second best short theme in the sectors heading into next week. And we're looking at DVN, so Devon Energy, really weak stock in a weak sector. And if we can pull back, you can see the momentum we've got here. If we can pull back and test the 36.39 and start to trade above it, This is where we enter the sell zone. This sell zone is where the odds start to swing quite significantly in our favor for a reversal back inside the range. So I'll be looking above here for reversal patterns and for a 1 or 2 day liquidation back inside the range. If we blast through here, it means we've got abnormal momentum. This is the second place. I'll be looking for a 1 or 2 day short, whether I'm short already from here or not. And the third and final thing is look for the break back above the moving average as always, and then back down below it. And that gives you your bear flag setup, comes in, hugs the moving average, moves away, hugs the moving average, moves away, into the profit taking zone to the downside here below the 33.58. And finally, we have Oxy, which sits in XLE as well, another energy stock. Now, what I like about Oxy is look at how we've been consolidating in this kind of range. And now we've broken out with momentum. So this sets up a nice bear flag setup in and of itself. We pull back, we trade above the 49.23, especially if we trade above it and take out this low. So a nice stair step. This is where I'll be looking for a potential 1 or 2 day reversal to the downside in Oxy next week. If we blast through here, so we're going to be breaking back through the prior low and back inside this consolidation. If it does that, it shouldn't be doing that. But if it does, above the 50.92 is where we become extremely overbought intra-week. It's the second place I'd be looking for a 1 or 2 day reversal back inside the bigger range. And the third thing, look for that pullback into the moving average or just above it, and then the push away. And you can look for that first pullback and test of the moving average where we start to move away like this, and that puts you right into the profit taking zone of the 45.84 in Oxy next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-Trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge-platform is included with every GMT membership.